A couple of numbers that came by. Uniparts India reported a decent third set of third quarter numbers. Actually, it's the first quarterly performance that the company is reporting since its listing. They saw almost a double-digit growth in their revenues. The EBITDA margin increase was something that really stood out in the numbers this time. We have Gurdeep Soni, who's the chairman and managing director of the company, joining in to discuss these earnings in detail. Thanks a lot, Gurdeep, for joining in. While there was a growth year on year of almost 10%, there was some softness quarter on quarter. Could you explain to us what that softness was all about? And the margins came in closer to 24%. Are these sustainable from here on? So your revenue projection and margins, are they sustainable?
Good morning, and thank you for having me on your show. And yes, the results have been quite fantastic. In fact, I would say because, in fact, we've had a revenue of 1,037 crores for the 9-month period, which is 18% above the previous period. We've had a EBITDA of 243 crores, which is actually 21% over the 9-month period of the previous. And the PAT has come at 159.6 crores. Whereas the EPS is 36 crores.
Gurdeep, we have those numbers. We have those numbers. Those numbers are for the public to view as well. What we want from you is what happens from now. You said revenue is a little over 1,000 crores in the first 9 months. 1,400 crores is the annualized figure. Are you on track to do that? And margins at around 24%. Is that sustainable?
So we are on track for the next quarter also, as we have been in the first for the first 9 months. And the margins, we had a 6.6 crore exceptional one-time gain last quarter. That was from a check we received from the American government for protection of wages, so that pulled up the margins a little bit, but sustainable margins are between 21 to 22%, clearly moving forward.
All right, so 1,400 crores, Mr. Soni, for this year. Sustainable margins of around 21-22%. We get that. A couple of questions here. For FY24, what kind of a revenue growth can you guide us for? Point number one. I'm holding on to that margins of around 22%, or if you want to up that, you can tell me. And also, what about revenues at optimal levels? Given that you're doing around 1,400 crores, next year there'll be some growth. At optimal levels, what is the revenues that you can do with the current gross block?
So for the next year, we are again, our end customers are very positive, because our over 81% of our business is exports to the US and Europe and Japan. Particularly in the US market, our customers are looking at a 12 to 15% growth in this current year. And we are also looking our business to grow 5 to 7 to 8% because of the growth of existing parts. But more importantly, the China Plus One is playing out very well for us. And we are expecting new business that has already come in of about 130 crores over and above our standard business. And we expect an overall growth of about 15 to 16% moving for the next year as well.
So 15 to 16% for the next year. Just roughly, calculating that number, you should be in the vicinity of close to around 1,600 to 1,650 crores for next year, right?
Correct. So and there will be some correction I would like to mention over here, because sea freights are coming down and also steel prices are coming down. And in the past, these are pass-through entities. So because these are coming down, we will see a correction because of that, a softness. But that has nothing to do with the effect on our PAT numbers.
So at current reckoning, though, you're guiding for close to around 15% growth, right? At current prices, it'll be around 1,600 crores, very roughly. If steel prices come down, obviously that will come down further.
Steel and sea freight both are, in the process of, in fact, come down, and they're passing through right now.
Got it.
Okay. I just wanted to understand, going forward, your revenue contribution, because from what I look at right now, 36% comes in from PMP. You have adjacent products which account for about 12% of your revenues, and 3-point linkage is 58% of your revenues. But the more margin accretive business is PMP and adjacent products, because I remember the last time, just before the IPO, when you joined us, you said that it's a 25% margin business. So can we expect higher contribution coming in from PMP? Can you give us a sense of what the revenue contribution of the company will look like going forward?
In all fairness, we don't look at our margins from product segmentation. What we do is the way we sell the product, our highest margin, which is about 28%, comes from what we do from sales from our warehouses. And that portion of our business is growing. And then what we do, direct sales from India to overseas customers gives us an average of about 21% EBITDA margin. So, and we are seeing moving forward that the percentage of sales moving from our warehouse are moving up compared to what they were last year.
So could you give us a sense, what is the contribution right now coming in from warehouses and how much do they go going forward?
So the warehouse model contributed 41% last year. In the first 9 months, it contributed about 43%. And a lot of the new business that we are acquiring is primarily going to go through the warehouse model.
Okay, all right. Mr. Soni, you're going to be spending 45 crores, right, in terms of CapEx. What is the asset turn on that? What kind of revenue will you get?
So we have already in the first 9 months spent 23 crores and we are on target to spend another about 15 crores in the current year. So that's what we're looking at. And we have seen that for every one dollar of capex that we do, our revenue goes up by 8 times.
By 8 times. All right. So from this capex that you've incurred this year, you could realize another 300 to 350 crores.
Correct. So the capex is done, when I say that we've already done 23 crores, that's already contributing to some of the revenue growth of the current year. And then, of course, the balance will come into the next financial year.
So, Soni, at current prices, given that this year you'll do 1,400 crores, next year you should do in the vicinity of around 1,600 crores at current steel prices, as well as freight cost. Your optimal potential of revenue is what?
So we are running at about 81% capacity right now, and I think that's what we are going to be running at moving forward because of the way the business is.
Good speaking to you, Mr. Soni. Thanks so much for stopping by and giving us a sense in business. One would think that the globe is slowing down, so maybe having a higher proportion of export revenue would be a risk. But you're saying that your business is sounding good, your customers as well are sounding extremely confident. So we wish you well, and we look forward to chatting up with you at the end of next quarter. For the time being, let's move on. Let's just focus our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us to talk about a stock that is tracking very closely. Jitendra?